What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Tuesday, April 2nd. Alright guys, Nvidia stock here today, flat day, up just 7 cents a share, plus 0.01% in regular trading hours. It has faded a couple of bucks as of right now in the after hours. But listen, as always, we have to take after hours movement with a grain of salt. The volume is very low, so whether it's in your favor or going against your directional bias, take it with a grain of salt, unless the volume in the after hours, of course, meets or exceeds intraday. All right, let's take a look here, starting with trying to pull out as much potential bias as we can, kind of like hidden bias, by looking at the volume profile here on the 5-minute chart. Okay, now this, I think a lot of people don't understand the difference between the price action and the volume profile. Okay, what I mean, and that's okay, by the way. What I mean by that is we're kind of pulling back a layer of the onion, looking at a different potential bias indication that, by the way, commonly tells a different story than the price action itself. But I need out of context volume that correlates with obvious, larger, more aggressive moves in stock price. And then what the volume does is it tells us, okay, is the underlying bias, at least in terms of the volume profile, does that agree with the move, or does it actually go against the move, which is certainly possible. We see it all the time. So the two moves that I'm primarily interested in here on Nvidia today are going to be that push off the open to intraday highs of 922.25. And then I also want to take a look at this fade that we got. And really, that's it today. That's it, just those two moves. Let's take a look here now. Couple of things here that I'm immediately seeing. Typically, we see that opening bar as one of, if not the highest volume bar of the day. It's incredibly common, especially in a stock like Nvidia. If you've been tracking it for any period of time, you know that that is usually the case here. Now today, we didn't get that all too common fade immediately off the open. We actually popped for a couple of bars and held on this third bar here as the stock made the push higher toward intraday highs. Okay, that's a clear, short-lived, it's not incredible, but it's a short-lived, obvious bullish bias that aligns with that upside push off the open. So we have that, but if we move on here, in this long-lived kind of hour and a half long fade that we got intraday or kind of later morning here today, we saw very contextual volume with a couple of pops. This one and this one here, for me, those two kind of offset each other. Okay, but they're surrounding this bigger pop. I know that a lot of people are going to look at those and think, what's going on there? A lot of bears might look at that and say, that's some obvious bias. We laid out some bullish bias on the open. There's bearish bias on these two bars. My one problem with this is that this is obvious off the open because we at least got a couple of bars and then a nearly 1.6 million share bar. Whereas these two were dealing with less share volume and they're singled out. So there's a little bit higher risk of that potential fooled by randomness. And by the way, on this candle here, the second poppy candle, we had a wick on bottom, which indicates to me a little bit of a battle. All right, now, granted, we have to lay out on this biggest volume bar of the day, we saw an upside wick. However, in relation to the total size of the candle, it's a less significant wick. So, was there some selling pressure on this second 5-minute bar of the day that pumped up the volume a little bit? Of course. But I would argue simply by looking at the wick size that the percentage of the, other side volume of the total bar, okay, like selling on this green bar and buying on this red bar, it looks to me like the percentage might be a little bit higher on this red bar here, making it a little bit more of a battle bar. And again, there's always the risk of fooled by randomness, where that risk to me is a little lower off the open. Because not only is it right off the open, right, but we're also seeing a larger bar, in general. So to me, it makes a little bit more sense. Okay, now even that being the case, a little bit confusing on the volume profile here today, I understand, but stay with me here. Even that being the case, the price action, the bears were able to push this thing back down toward and below for a period of time, $900 a share. All right, that's a really big deal. Let's move on here and start taking a look at the self-fulfilling psychological levels, with the most important being the daily, but we have to take a look at these other popular, like the 30-minute and 4-hour. We'll just take a quick look here. Nvidia here today. You guys remember over the weekend, we discussed in the weekend video prepping for today how this 50 period on the 30-minute was becoming kind of an issue. We were really struggling. Well, we gained that in pre-market, and we bounced a little sloppy but hard off the open. Again, the pre-market, we have to take that with a grain of salt. Look at volume is almost, you can't even see it. And to me, intraday is a lot more definitive. Well, we held it off the open and then faded and gave it up very quickly intraday. We made a couple of retests here on a couple of 30-minute bars later in the day, unable to reclaim it. So listen, that's still kind of an issue, right? We spent the majority of today below that level, and we're now sandwiched in between 9 and the 50 period here on the 30-minute. So listen, bulls, my best case scenario, looking specifically at the 30-minute chart, is to use 9 as kind of a trampoline to push up through finally, after a couple days here, that 50 period and actually hold it. Now, a hold, I really like to see a push through on high volume, a retest on lower volume, which we started to kind of get here, at least comparatively speaking to the volume on the push through, right? Or the bounce more so off pre-market, which is a similar situation in my head. We were just unable to get that high volume bounce. We just broke downside right through. So I want to see tomorrow a high volume break, a lower volume retest, and a high volume bounce and pull away and actually reclaim the 50 period for once, whereas we've been struggling the last couple of days here on the 30-minute chart. Now, you bears, we're getting to the point here where if this stock is unable to reclaim the 50 period here on the 30-minute, we're close. We're in a tight channel now. It's a 4-point channel in between 9 and that 50 period. So bears, that 50 period could be your guys' ceiling to push us down through 9 for a hold. Finally, again, if we pushed down through there earlier today, but remember, an hour here, an hour and a half there, it's not enough for a big macro level like 900. We need more definitive movement with a lot more volume, which really means time below or above that level to really be definitive. All right, now, the 4-hour chart, let's take a look. It's a similar situation here on the 4-hour chart. That 50 period is a problem. Currently, it's sitting at about $912.50, okay? So we have about a $12, $13 channel here on the 4-hour chart, and we're struggling to reclaim that 50 period. So, bulls, really simple here. Use 9 to push up through. Again, high volume break, low volume retest, high volume confirmation on the bounce away from the 50 period on the rebreak. And bears, you guys are going to want to see any retest of that 50 period reject hard, because your ultimate goal is to get down through that big level, which brings us to the daily. Okay, the story here, guys, on the daily is very clearly for the last 3 trading days now, and by the way, with each additional trading day, that this is a level where volatility is kind of down in all reality, quite a bit less than what the expected volatility is. With each passing day where the level is still in play, I would argue it becomes more and more likely to see a choice being made. And that's either a break downside or a big hold. I mean, listen, bulls, it's time. 9 needs to make a definitive hold here on as much volume as possible. Ideally not below average volume, but we want to see a high volume bounce as far away from that level as possible. Just get it out of play, at least in the meantime. Bears, you guys aren't, I feel like I'm saying that the bulls aren't doing so hot lately in terms of reclaiming those 50 periods, but bears, I mean, look at you guys. You guys are struggling to reclaim 9. It's been 3 days. You've tried all 3 days and failed. Okay, if you're a bear, it's time to crack 9 to the downside on as much volume as possible and set yourself up to use 9 as a ceiling to head down toward 850. Right? Whereas bulls, listen, in all reality, a hold of 9 and a really definitive hold, I don't mean for 6 minutes. I don't mean for 2 hours. I mean for a couple of days, putting some distance in between the stock price and 9 on big volume. I mean, let's be real. A hold of that kind of sets the bulls up for a potential test of that real level, which is not all-time highs. It's $1,000 a share. I mean, which, by default is an all-time high, but 1,000 to me takes precedence over just 974.01. All right, now, implied volatility. You know, it's pretty flat here. It bounced just slightly today compared to last week, but it's down overall. Remember, the lower IV goes, the more favorable conditions become for new options buyers and sellers to come in and purchase contracts, right? Those of you who bought contracts on perhaps March 12th, kind of the middle of the month, you may be seeing some IV crush. Okay, that implied volatility value, that's your culprit there. Now, expected move. Okay. The next expiration we have on Nvidia is not until Friday, April 5th. And the expected move by then is plus or minus $33.66 per share. This is the volatility expectation. The expected move itself, it's a technical term, right? It's priced from the options. That in and of itself does not have a directional bias, but it's a huge piece of the puzzle. It's the volatility bias. This is huge. This is a huge teaching point for members in the Roensch Capital Gold server, because this can change everything about your options trading. If you don't understand this, it's a really, really big disadvantage. If the expected move by Friday close is plus or minus $33.66 a share, there are no earnings events between now and then, okay? And if you divide that by 4, that tells us the market's expecting plus or minus about $8.41 of movement per day. However, that assumes that we're not seeing a mix of red and green days, okay? So what I kind of like to do, since it's very difficult to do this any other way, to me it makes sense to say, okay, well, let's add maybe 50% to that for daily movement, assuming we see a mix of red and green days. And it tells us that, you know, perhaps the market is kind of seeing maybe plus or minus 12 or 13 bucks of movement per day out of this stock, which is not a lot, right? And that number, based on the last couple of days here, you know, perhaps that's being priced in to come down a bit. Now, if you disagree with that, that can open up some opportunity to position yourself and capitalize on that disagreement, okay? That doesn't give us directional bias. It gives us volatility bias. The analysis gives us the opportunity to open up the conversation about directional bias, you know, within ourselves. There's one more thing we can do here, right? And that's the options bias. 1.13 million total contracts traded today. 671,000 of those were calls and 461,000 of those were puts. And look at this here. That short-term speculator delta range, 0 to 20. Those are those far out of the money contracts, right? The furthest out of the money with, on average, the shortest term expiration. Those are the most gambly style bets available to us, at least in terms of data, in the market. That's what I'm interested in, because this video is geared toward an analysis for tomorrow, Tuesday. Okay? In that range specifically, we have 264,000 calls and 186,000 puts. So on both fronts, on the short-term speculator front and on the overall call-put ratio, we're seeing a bit of a call side bias. Now listen, it's not triple, right? But it's there. I wouldn't say it's ridiculously overwhelming, but you know, it's there. Listen, tomorrow's the battle of 9. It's time. You know, the clock's ticking, the days are going on, and this thing's going to decide, you know, someday here in the near future. So, high volume in your direction, away from that level, making a definitive move, that's a big deal, and that needs to get done ASAP. Listen, if you got value out of this video, please subscribe to the channel. Greatly helps out. Go ahead and share the video with someone who owns Nvidia if you think they'll benefit from this information, and I'll see you in the next one.